Hi, my name's Andrew. Thank you for visiting my YouTube channel. In this video, we're going to look at how venture capital firms evaluate your pitch deck. This is a great video for founders who are just getting ready to start their fundraising campaign. A little bit about myself. I'm a fundraising strategist with 15 years of experience in high-end real estate sales and marketing, spanning Canada, Dubai, and the Caribbean. And over the past 2 years on Fiverr, I've assisted over 250 clients with startup fundraising, pitch deck refinement, investor outreach strategies, and custom investor databases. In addition, I serve as an advisor to a New York-based global private equity firm with funding commitments of $10 billion. Now, the fund diversifies across many sectors, including income-producing real estate, and frequently involves capital commitments in the range of $10 million to $20 million per project. If you want to learn a little bit more about my profile, just click my Fiverr link below. So this video is a focus on how venture capital firms evaluate your startup pitch deck, and as if you've watched my previous videos and if you've been on my Fiverr profile, you know I have a pitch deck review service, so this is quite tied in with that. 80% of pitch decks are not suitable to be sent out to investor, and I can definitely help you with that if you're starting to get ready on your fundraising. So let's take a look at the evaluation template that a venture capital firm or an angel group would use when they first look at your pitch deck. So this is just a very simplified evaluation template that many venture capital firms use, angel groups use, and other groups that are going to evaluate your pitch deck. And in most cases, your pitch deck is going to land on the desk of somebody as an associate or an analyst. It's never going to go up to the top unless it passes a certain amount of tests. And don't believe anybody that says that you should never send your pitch deck into somebody that you don't know. Many times you'll see on venture capital websites or not necessarily angel groups, but maybe private equity ones, saying that, you know, we like to have a warm introduction. Those were old days, and I would actually encourage people, if you've got your pitch deck done, find at least one contact at the firm and introduce yourself. Now, there's a way to do it. You can introduce it via a letter without your pitch deck, and there's another way where you can actually use your pitch deck in the first email. I have a strategy where I like to actually ask the people who are at the admin or HR who would be a good contact to reach out to. It's a good way to do that first warm introduction to that first venture capital firm. Let's move on to the evaluation form. So again, this is very simplified. You're going to have the company, they're going to put your industry, they're going to put your stage, and they're going to put the capital raise, in other words, the amount of money that you're looking at. They're going to write a brief description of it. Usually it comes right off of the About Us page. When I help people with their pitch deck reviews, I'm using these tools, and I'm also using, if you watch the last video, it's on 120 questions that an investor will ask you, and I combine a lot of these type of points into how I fix people's pitch decks. Again, 80% of them that come to me are not suitable to be sent out. So this type of strategy and using these tools that a venture capital firm uses is really going to help you out. So then they're going to move on to the investment criteria, and these are all rated out of 1 to 5, 1 being low, 5 being high. They want to know a little bit about your target market. Is it clearly defined? Is it large now or in the future? Stable or high growth? Is it a high priced niche? So those are really key things. Problem or need. Now, the problem is the need real. I get a lot of pitch decks sent to me, and sometimes I will go back to the people that send them to me and say, listen, you haven't really determined if there's a problem. You may just be thinking of an idea. It might be a little bit better than someone else's or the same, but you haven't actually really identified the problem. That's something that I find in most pitch decks. So they're going to want to find that out really soon. Is it sustainable, and is the pain, challenge, and need? Then you move on to solution. So the solution, problem and solution are two of the most important pages on your pitch deck. The solution, better, faster, cheaper, brand quality, efficient, convenient, unique price, value proposition. They're going to look at all those points and evaluate them. Again, remember that a pitch deck usually gets read in 2.5 minutes by the average venture capital firm, angel group. Some of these firms get 50 to 100 a day, so they know exactly what they're looking for, very much what I know what I'm looking for. If you send me your pitch deck, I'll know within about 5 minutes if it's something that's going to work or not, or if it needs help to get it to work. And they're very much the same way, probably even a little bit better. Um, Team, board, advisors, industry knowledge, unique skills, leadership, key relationships, prior successes, and or failures. Now, if I look at those points, I would say about 80, at least 80% of the pitch decks that I have don't mention their key relationships, their prior successes, and or failures. Remember one thing, that companies, venture capital firms, angel groups are just groups of angel investors that are part of an organized venture. They invest in teams first and then the idea. So keep that really important. And when you are creating our team slide, it should be one or two people, not 10 people, including your IT person and your admin person and your business. Those are not the people that they want to see. They want to know that basically the two top people in the company, and that's about it. Then you want to go to traction. If it's a minimal viable product, they want to know that. Customer return on investment, key metrics, money raised, partners. They're going to want to know if you've done anything other than create a pitch deck with a great idea. That's really key. Competition versus competitive advantages, direct or indirect barriers to entry, differentiation, simpler alternative exists, future obsolescence, unfair or sustainable advantage, patents, partners, key risks. One of the things I found out is some people actually, in their competition slide, um, are actually using competitors that aren't really competitors. They're venues of distribution, such as Instagram or Facebook. Those are not your competitors. They're nowhere near close to your competitors. They're areas that help you reach your clients, but they're not competitors. Revenue model. Customer units times the price, a recurring or one time. They want to know, is this a product that gets bought once, or is it something could be on subscription? Sales cycle, high price versus volume. All those key points are going to be part of your market slide and your business model slide. Strategy, key expenses, time, efforts, cost of the product, improved gross margin, cost and time to maintain customer operations, marketing, strat improvements. Again, they want to know a little bit more about your deck. Now, I would say just even getting to this point in this valuation document, which we're about halfway through, most of these things that I'm seeing, not in these points here, but in these points here, aren't on most people's pitch decks. You don't have to have all of them, but if none of them are on there, then that's a warning sign. Financials, revenue, average rate of return, gross or net revenue, gross margins, path to profitability, market penetration required. Usually on your financials, you only need one slide and about 4 bullet points, and you can probably cover off a fair bit of that by using that. I've seen a lot of pitch decks that have 5 slides related to financials. That's for your business plan. Put those in your business plan. Your pitch deck, again, should be something that can be read and absorbed in 2.5 minutes. So you should just test your pitch deck. Take a stopwatch and read it on a regular rate, and if you're above 2.5 minutes, you might want to go back and start to cut out, or just send it to me and use my pitch deck review service, and I'll clean it up for you. Exit opportunities, potential buyers, multiples, big enough exit, so some of that is also going to be part of it. Investment terms, amount, they want to know a little bit about your debt, if you have any, your revenues, your investors. And lastly, strategic value. They want to know how they can help directly or indirectly as a strategic intros to customers, partners. Now, what that means is by using, I have another one of my services is I have venture capital databases, I have private equity databases, I have 400,000 contacts. If you've watched any of my previous videos, you'll know that. I've got tons of videos, over 425 right now on YouTube, that talk about databases, strategy, pitch decks, anything having to do with fundraising. And a lot of those are the different types of databases that I have. If you're looking to approach a venture capital firm especially, you might want to know what they specialize in. Take a look at other companies that they've invested in. If they've invested in other companies like yours, that's a plus, because they already have relationships and areas of synergy that they're going to be able to utilize and help you as well. So then they're going to come up at the end with a score, again using the 1 to 5 as the categories. So now that we've looked at the document, let's look at the scoring system for potential further review. Typically, a score of 3 or above out of 5 is considered a pass by a venture capital firm when deciding whether to push the opportunity up the organizational chain for further investigation. And like I said, your pitch deck is usually going to be read by somebody at the junior level, which are good connections for you to have for sure when you go out to do some outreach. So this indicates that the company meets or exceeds the minimum threshold in key evaluation criteria and shows potential for further consideration. However, it's important to note that the decision may also be influenced by other factors such as market condition, competition, and the firm's investment strategy. So that's really important. That's why when you use my databases, they're not to be used for spray and pray email campaigns. They used to be used for strategic fundraising initiatives. So that's something that's really key. You should only have to reach out to 100 venture capital firms if your idea is good to be able to start getting meetings, and that's something that I think is really, really important, and you should start that early in your company's shortly after you launch your company, you should start to make connection with people in the fundraising business, even though you might be a year or two away from it. A lot of times people miss out on that opportunity. So in conclusion, understanding the evaluation criteria enables founders to align their pitch deck and business strategy with investor expectations. Awareness of how they're being evaluated empowers founders to focus on strengthening key aspects of their business model and presentation. Like I said, when I'm doing my pitch deck reviews, I'm using all this kind of information and strategy to help input a little bit of those type of items in. The previous video I did with 120 questions an investor will ask you. Now, not every 120 question is going to apply to your particular business, but what I do is I like to make sure one or two on each slide is being answered so that the next meeting that you have with the potential investor, venture capital, angel group is something that talks about moving it forward, not answering old questions. Now, by understanding the evaluation process, founders can proactively address any weaknesses or gaps in their pitch deck and business plan before presenting it to investors, very much like what I just mentioned. Awareness of the evaluation criteria enables founders to make strategic decisions about their company's direction and growth trajectory, ultimately increasing their chances of securing funding. So everything that I do and all the items that I try to help people out on my Fiverr profile is that key point, is to increase the chances of securing funding, period. Final point on some of my gigs. If you go to my Fiverr profile, you see that I have pitch deck reviews. These are four of the main ones. I have the ultimate guide to raising startup capital. If you're just starting, if you've never raised capital before, it's $5. Check it out. Check what people have said about it. It's 160 pages. It'll teach you how to do business plans, pitch decks, investor letters, everything you need all in one spot, and I price it at $5 to make it really easy. Trust me, it'll be the best $5 you spend in your fundraising career. Now, I will help you find investors. This is specifically for the USA, but it can be branched out. I priced it at $250. What it is, it's a basket of services that I can offer you. Do not order it without contacting me, because actually the price is just there to allow people to contact me, and I custom put together a bunch of things regarding fundraising. And the other one that's really big, I will rewrite the copy for your pitch deck. When you get a pitch deck done, almost all the time, whether it's on Fiverr or other services, what's going to happen is, most of the time, it's going to be given to somebody who's an expert in designing, not an expert in strategy and business. And those are two different people. I only get involved in strategy, content writing. You can check on my Fiverr profile. I'm in the top 10%, 20% of people who have taken the proficiency tests on Fiverr. So basically, I only work with you when it comes to strategy and content. After that's done, for example, if you give me your business plan, give it to me in Word document, of course, I will actually rewrite your slide for your pitch deck. Then you give that to the designer, who puts in the pictures, puts in the charts, puts in the icons and everything you need to do. Do not do it the other way around, because what will happen is you'll get charged $250, $300. They'll make you up this pitch deck. Then you'll send it to me and say, Andrew, take a look at your pitch deck. And I'll say, you need to get this redone. And you don't want to do that. So check out my services on Fiverr. And also, if you need fundraising databases, you can contact me as well. For more information on my databases and fundraising services, click the Fiverr link below. Thank you for watching. Please like, share, and subscribe.